In a world that screams faster, a world obsessed with instant gratification and overnight success, we are taught a single, relentless narrative about wealth. It's a story whispered by every financial news channel, every trading app notification, every guru promising a secret formula. We're told to chase the market's every whim, to ride the volatile waves of speculation, to act decisively and immediately on every piece of breaking news. The system is built on speed. We see images of frantic traders, their faces illuminated by screens filled with flashing numbers, and the intoxicating promise of fortunes made in a heartbeat. This is the gospel of modern finance. Speed is king, and hesitation is failure. The pressure is immense. Buy now. Sell now. Don't miss out. But what if that entire frantic, high-stakes chase is a grand deception? What if the system itself is designed to make you fail? What if everything you believe about making money is wrong? What if the true path to extraordinary wealth isn't a sprint, but a marathon run at a deliberate, almost meditative pace? What if the secret isn't found in the noise of the crowd, but in the quiet of your own conviction? Most investors chase opportunity, but what if the real advantage is doing nothing at all? What if the fastest way to become rich is to slow down, to step away from the chaos, to ignore the deafening roar of the herd, and let a force far more powerful than market timing do the work for you? A force that operates on a different timescale entirely. This is not a story about genius-level intellect, or complex algorithms, or having a crystal ball that predicts the future. It's not about being the smartest person in the room, the one who can process information faster than anyone else. In fact, many of the world's most brilliant minds have failed spectacularly at this game, undone by their own cleverness, convinced they could outthink a system that doesn't reward thinking, but waiting. They build intricate models and sophisticated forecasts, only to be ruined by an unpredictable event they couldn't possibly have seen coming. This is not a story about intelligence. It's about a different kind of wisdom. This is a story about something far more rare and far more valuable. This is a story about control. Not control over the markets. That's an illusion, a fantasy sold to the masses. But control over the one thing you can truly command: yourself. Control over impulse. The discipline to stand still when every instinct, every news alert, every fiber of your being screams to run. The strength to say no when the entire world is shouting yes. It's the power to simply sit and wait, to do nothing when everyone else is busy losing money. Because in the end, the market does not reward movement. It rewards endurance. And even more profoundly, this is a story about control over time. Not just resisting the urge to act in the moment, but fundamentally changing your relationship with the future. It's the ability to see beyond this quarter, this year, even this decade, and to make decisions based on a horizon that most people can't even fathom. It is the wisdom to plant a tree today, knowing you may not sit in its shade for a very long time. This is a story about harnessing the immense, unstoppable power of compounding, a force of nature that only reveals its true magic to those who give it the one thing it requires above all else: years of uninterrupted runway. Time left uninterrupted. One man became the living embodiment of this philosophy. A man who, in the beginning, was like everyone else, buying, selling, reacting. He was not wrong. He was simply operating inside the system everyone else accepted. But then something changed. He stopped chasing opportunities and started building a system. His name is Warren Buffett. But this story is not about him. It is not a biography of one man's success or a guide to becoming a billionaire. It is an exploration of the timeless, almost forgotten principle he mastered. This is a story about patience itself, and how the simple act of waiting can become the most powerful financial strategy of all. Before he became one of the richest men in history, an icon of modern finance whose name is synonymous with wealth itself, he was just a boy A boy living in a world awakening to new possibilities. A world where fortunes were being forged not just in factories, but on paper. This was an age of transition, where the hum of industry was being joined by the silent, frantic whisper of the stock ticker. For most, this new world was a distant, complex machine. But for him, it was a puzzle begging to be solved. He was a boy trying to understand the strange and powerful language of money. He didn't just see coins and bills. He saw a system of value, a network of promises and expectations that connected everyone, yet was understood by almost no one. He wanted to learn its grammar, its syntax, its secrets. He saw it all around him, in the transactions at the general store, in the headlines of the daily paper, in the quiet, anxious conversations his elders had about savings and risk. He observed how people spoke of money with a mix of hope and fear, as if it were a temperamental force of nature, like the weather. To him, it wasn't just currency, it was a current, an invisible force that shaped the world, directing the flow of ambition and determining the fate of families and businesses. And he wanted to understand how to navigate it, not by guessing, but by knowing. He wanted to find the logic hidden beneath the noise of human emotion. So, with the courage of the uninformed and the optimism of youth, he made his first investment. It was small money, scraped together from odd jobs and saved allowances. A sum that was insignificant to the market, but meant the entire world to him. Every coin represented hours of work, every bill a lesson in deferred gratification. Yet, attached to that small sum was a big expectation, a belief that he was stepping into the adult world, participating in the great engine of capitalism he so admired. This wasn't a game. It was his first attempt to speak the language he had been studying from the outside. He wasn't just buying a piece of a company, he was buying a ticket to the inside. And so, he waited. The days turned into weeks. He watched. He tracked the price in the morning paper, a daily ritual of hope and anxiety. The tiny printed number became the focal point of his day. He learned, not from textbooks, but from the raw, unfiltered experience of having his own money on the line. This was a different kind of education. There were no theories, only consequences. He learned that the market had a life of its own, a rhythm of fear and greed that often defied logic. He learned the difficult art of patience, the discipline of sitting still while the world was in constant motion. He was learning to endure the quiet tension between his decision and the outcome. Then came the moment that changed everything. After a period of steady, satisfying growth, the stock took a slight dip. It was a minor fluctuation, a common market tremor, the kind of noise that sophisticated investors ignore. But to a boy on his first voyage, it felt like the ship was taking on water. The small profit he had so carefully nurtured was suddenly at risk. The abstract numbers on the page became a visceral, physical sensation of loss. The fear of losing what he had gained began to eclipse the hope of what he might still achieve. The logic he sought was overwhelmed by a primal instinct, the fear of being wrong. This was his first real test, not of his intellect, but of his nerve. He sold. Too early. He rushed back to the brokerage, his heart pounding with a sense of urgency. He cashed out his certificate, securing a modest profit. For a moment, there was a wave of relief. The anxiety vanished, replaced by a feeling of accomplishment. He had won. He had beaten the market, protected his capital, and walked away with more than he started with. He felt smart. He felt in control. He believed he had outwitted the system, timing his exit perfectly to avoid the impending disaster he had imagined. He had imposed his will on the chaos, and after he left, the value kept rising. The slight dip that had spooked him was just a pause, a breath before a monumental surge. The next day, the price climbed, and the day after that, higher and higher. The relief he had felt curdled into regret. The small profit he had taken seemed to shrink with every new tick of the tape, a monument to his lack of conviction. But he was no longer inside it. He was on the outside, looking in, a spectator to the fortune he had abandoned. He had traded a seat at the table for the false security of the sidelines. The market didn't care about his fear. It simply continued its journey without him. In the final accounting, he didn't lose money. On the ledger, the entry was black. But he lost something far more valuable. He lost timing. He lost opportunity. He lost the conviction to see his thesis through. He had let a momentary flicker of fear sever him from a life-changing outcome. The real loss wasn't measured in dollars and cents, but in the vast, yawning gap between what he had and what he could have had. It was a painful, unforgettable lesson in the true cost of impatience. He had made a mistake, not a financial mistake, but a psychological one. He had reacted when he should have endured. And that moment, that painful lesson in opportunity cost, became a rule etched into his very soul. A foundational principle that would guide every single investment decision for the rest of his life. It was the scar tissue that would make him stronger. He realized then that the most dangerous mistake in investing isn't picking the wrong company or suffering a temporary loss. It's not the red on the ledger that destroys fortunes. It's leaving a great story before it finishes. It's the failure of nerve, the surrender to short-term noise. He learned that true control wasn't about buying or selling at the perfect moment. It was about having the patience to let time do the heavy lifting. Years later, he made a decision that made no sense. He bought a dying textile company, Berkshire Hathaway. Even he later admitted it was a mistake. Not strong, not growing, slowly collapsing. But instead of leaving it, he stayed. And something unexpected happened. He did not fix the company. He changed its purpose. A failing factory became the foundation of something far larger. For years, he had played the game of investing by its established rules. He bought and sold, analyzed and predicted, riding the same volatile waves as everyone else. He was a participant, a skilled one, but a participant nonetheless, subject to the whims of the market. He was caught in the relentless rhythm of reaction, a dance dictated by headlines and quarterly reports. Every day was a new battle, a new calculation, a new attempt to outguess the collective psychology of millions. But a mind like his could not remain a mere passenger forever. The constant cycle of reaction, of being pulled by forces outside his control, began to feel like a cage. A gilded cage, perhaps, but a cage all the same. The wins were exhilarating but fleeting. The losses were a constant, grinding reminder of the system's inherent chaos. He started searching not for a better stock, but for a better system. Not for a different move, but for a different game entirely. A game where the rules were not set by the frantic noise of the trading floor, but by something more fundamental, more enduring. Then came the real shift. It was a fundamental rewiring of his entire financial philosophy. A quiet, internal earthquake that would change everything. It wasn't a sudden epiphany, but a slow, dawning realization, a new geometry of wealth taking shape in his mind. He stopped thinking like an investor and started thinking like a system builder. An investor looks for value that already exists, a diamond in the rough. A system builder creates the very conditions for value to emerge, building the mine itself. An investor reacts to the present. A system builder designs the future. He was no longer interested in just owning a piece of the machine. He wanted to understand the schematic, to grasp the levers, to build a machine of his own. A machine that would run on different principles, powered by a different kind of fuel. A machine that didn't consume capital, but generated it. A machine that ran not on speed, but on time. His search led him to an unlikely place. An industry so ubiquitous it was practically invisible. So deeply woven into the fabric of commerce and daily life that it was completely overlooked by the very people searching for financial advantage. Insurance, a quiet industry most people ignore. It's the world of paperwork, fine print, and call centers. It's the bill you pay hoping you'll never need the service. On the surface, it was the definition of unexciting. It lacked the glamour of Wall Street, the thrill of venture capital, the disruptive allure of Silicon Valley. It was the domain of actuaries and underwriters, of risk tables and legal clauses. It was perceived as a cost, a necessary evil, a drag on progress. But inside it was something powerful. He saw what others missed. He looked past the drab offices and the endless forms. Beneath the mundane exterior of policies and claims, he discovered a hidden architecture, a financial engine of immense elegance and power, humming along unnoticed by the masses. It was a system that operated on a different axis of reality, a different dimension of finance. The mechanism was deceptively simple. In most businesses, you deliver a service, and then you get paid. The cash flow is linear. A product is made, sold, and money is received. The transaction is complete. But in insurance, the entire model is inverted. The logic is turned on its head. Money comes in now, but is paid later, sometimes much, much later, decades even. Customers, or policyholders, pay money, premiums, today, in exchange for a promise of protection against a possible event in the future. A fire, a flood, an accident. They are buying certainty in an uncertain world, and they pay for this certainty up front, in cash. This temporal mismatch, this gap in financial time, was the secret. The premiums collected don't just sit in a vault. They accumulate, forming a massive collective pool of capital known as the float. It is the sum of all premiums received that have not yet been paid out in claims. It is money held, but not yet owed. This created a hidden advantage, capital he could use immediately, without fully owning it. It was like being handed the keys to a vast treasury that wasn't technically his, but that he could manage, invest, and deploy as if it were. The float belonged to the policyholders, destined to pay future claims. It was a liability on the balance sheet. But in the meantime, in the long years between collection and payment, it was his to command. It was an interest-free loan from the future, a loan that, if the business was run well, would never have to be paid back. In fact, it would grow. From this moment, he was no longer reacting to markets. He was operating above them. He had built a system that generated its own permanent, ever-growing source of capital, independent of the daily noise of Wall Street. While other investors were forced to sell in a panic or borrow at high interest, he had a constant, predictable river of money flowing in. This river wasn't just a source of funds, it was a source of power. The power of patience. He could be patient when others were fearful, and aggressive when others were greedy. He was no longer playing checkers. He was playing a different game on a different board, with pieces no one else had. He wasn't just managing money, he was managing time. He was controlling financial time itself. Most investors chase opportunity, but what if the real advantage is doing nothing at all? While others chase trends, he searched for something else. Not speed, not hype, but survival. He invested in companies like Coca-Cola, American Express, The Washington Post. Not because they were exciting, but because they survive time. They do not require prediction, only patience, and he gave them decades. For years, he avoided technology. It was too fast, too unpredictable, too complex. But then, something changed. He invested in Apple, a company he once rejected, and the world was shocked, because the man who avoided technology became one of its greatest winners. Not because he changed his strategy, but because he finally understood simplicity inside complexity. Today, Warren Buffett is one of the richest men in history. But his story is not about money. It is about endurance, about patience, about resisting urgency. He did not win because he was fast. He won because he stayed long enough for reality to prove him right. But maybe the real question is not, how do you become rich? But how many opportunities did you lose because you couldn't wait? Because in the end, the market does not reward movement. It rewards endurance. Ultimately, it is patience, discipline, and a long-term view that are your greatest assets, giving you control over time itself.